Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 11th, 2021. It's a little after 10 o'clock Eastern Time as I'm starting the video, and what we'll do is an update on the equity markets. They remain on sell signals, so I'll do a quick update there. And just kind of a mishmash of individual trade ideas, updates on gold and silver and the euro. I'm still pressing that trade. I'll do an update on the QUBT trade I threw out there the other day. Disney, kind of, we'll have to wait and see if we get an objective entry. There was one last night after earnings on the breakdown. I'll go over that. And Bitcoin, I want to update Bitcoin and Ethereum. And as always, anything else that I've covered lately, if you want an update, just add it to the comment section down below. We've been troubleshooting. It's on and off. Comments will work for a while, then they lock up. Might have gotten it fixed now with some coding, but either way, I'll continue to check on that and have programmer work on that. It's just been tough to figure out why it is working sometimes and then it stops working. Okay. All right, the Nasdaq 100. This is the 60-minute chart. There was our sell signal the other day. I posted an update on the homepage today, so nothing more to mention really. When we had the sell signal on what was it, Tuesday? The time I had the first target listed here is 15,931 ish right there, and you can see we hit that to the button. So this is how active traders work. That's support where a reaction was likely, and we had a bounce. I added, as you could see on the updates this morning, I gave you two resistance levels overhead, and even made clear that it was my preference to start, scale back in if you took profits there, or if you missed it. Again, everybody's different. Some people may have not believed in the breakdown. Some may still not. That's up to you. But I mentioned that this would be an objective short entry anywhere from here where we were this morning. We're right about there. Let me zoom in a little bit for you. And if you're watching this video, you've probably already seen that post. We're a little shy of that 16,156 resistance, and so I mentioned you can scale in from here up to, but really not above there. I don't want to see if I really, again, doesn't eliminate the bearish scenario, but I'd prefer to see, and I believe the Nasdaq will stay under 16,290, and so that would be a scale in zone. But again, I made clear my preference. All eyes are looking at this, so the way I see things is those that recognize the breakdown and didn't short it and wanted to be short, or longs that got stuck, are now looking for bounce backs to resistance. And you may get it. Again, this may be it. Maybe it's just a little blip, pull back, and we go on to new highs. It wouldn't be the first time that we had a breakdown. But with that being said, if all eyes are watching, let's say 16,156, 50-ish, because that's the first resistance level, shorts, want to be shorts, want to get in there. Longs want to get out on the first bounce back to resistance. Well, what happens is quite often the sellers will step in early and deny all, and then you get the next leg down. And so therefore that was my preference, this morning to start scaling in there, and or up to, and or means, you can either do a full position if you covered everything right there, or scale in a little here, a little at that 16,158 resistance, and then your final lot up to 16,290, and then with a stop somewhat above it there, not too high. Again, depending on what you're looking at, we could certainly go for a back test of the trend line, and if we do and we get up there, the problem with back tests is they can happen at higher and higher levels. We could zigzag our way and back test it at a much higher level, because trend lines are dynamic. They're, the price level increases each and every day as time goes on, because they're upward sloping. Alrighty, let's waste no more time on it. That's it. Simple stuff. Nothing's 100%, but that was the best sell signal, and the first sell signal we've had in a while. And and you get those, you cover the dips down to support and sell the rips. And sometimes, especially where we're at now, that's one more thing I wanted to talk about. We're about 3 days into this correction. We're going on the second day, actually, second day, going on the third day. That's correct. And that's usually about when you get to that, what I call POR, point of recognition, where dip buyers, it's that rut roll moment where they've been buying the dip because it's worked for so long, for so many months, and after buying the first few dips, and just getting more and more underwater, they realize that something's wrong, that this time it's different. So we'll see. I think that's where we're at. Again, let's see if we take out the lows. Let's see if we go on to hit that next target on NQ, which, by the way, I should have mentioned that. You have the chart. 1576 right there. And then I still think we'll come down at least to this trend line here and around that 15,536 level. So that is if you don't want to try to game the counter trend bounces. And if we do hit that point of recognition, keep in mind that's where you have a higher chance of just blowing through the next support level with little, if any, reaction. So it's probably the last reversal, at least clean chance to take a reversal off the tag of the, because again, that was the first price target. And so you almost always get a reaction off the first price target. It's just when you start getting going down there, you may blast on through that one. So food for thought. And on that whole active trading thing, last update I gave you yesterday was in the video. We were coming up to, or just kissed, we were coming up to during the video, the backfill of yesterday's gap. This is where we closed on Wednesday. This is where we closed on Tuesday. There was yesterday's gap down. I did the video here, and I told you that would be an objective short entry, a backfill the gap, and you had a perfect, almost a, look at that within, center to an almost perfect backfill. These are 1 minute candles, so it took about 5-6 minutes of them testing. So it wasn't like you didn't have additional opportunities, and the video was published right after that. So there was still, we were just again fractional, less than just a fraction of 1% down below there, almost right on the gap. And had you shorted that, you had a nice 2% drop. And again, if you're trading NQ futures, that's where you would have covered. So you would have been able to add to it, get 2% on NQ in a matter of hours, and then cover on that support on the 60-minute chart, and or reverse it for a bounce. And again, this is where, this morning, that's where I said, well, that's my preference. Load back into the shorts, take the next for the next leg down, and if it goes up, hold tight for a while or add to them, and then up to those levels again that I just gave you on the 60-minute chart. So there's active trading. And then again, if you're less active swing trader, you just hold out and ride out the counter trend bounces. There's a quick update on ES. Nothing new to report. And there's a 60-minute chart. There was our bearish rising wedge, our negative divergence, our breakdown, and nothing but selling so far. And I should have had a line right there. You can see these reactions right there, and that's where we bounced as well in ES. As you guys know, my focus is on NQ, but I do keep an eye on this because sometimes NQ will break down and ES will hold support, and then the NQ breakdown fails. So we have, as I said recently the other day, sell signals on all the major indexes, including the small caps, with the break of that steep bearish rising wedge and the divergence and everything else. So more downside to come, and if that changes, then I'll do my best to let you know when things start to muddle up the outlook for the bearish scenario. Before we move off the indexes, I just wanted to go over a few of the market-leading FANG stocks, and also QQQ 60-minute chart. I had different targets. Sometimes I'll do that. I had that first target on NQ that I laid out the day of the breakdown, but I gave you different targets. The first target on NQ was so shallow. If you're an NQ trader, you made thousands of bucks per contract. That's that on even on a 1% drop. And so with QQQ, unless you're really leveraging up, and most traders don't, at least not as much. I have a little bit more. The first target comes in at a lower level, and again, they're not aggressive targets at all. They're just mild. That's a mild pullback, 3.36%. T4 still down there around a 7% drop from the breakdown point, not the highs from where the sell signal was triggered. But here's what I want to do is show you that there's what it looks like on the daily chart of QQQ. That same uptrend line that triggered the sell signal, nice and clean, and we're still well below it. And 382.80 would be your first support on the daily chart here, potential target. You can see the targets listed, and then there's that uptrend line. So this is where I think we're going down, at least in QQQ. And let's just take a look at what we need to really get there. First would be Microsoft. This is right now, right there at the top, right there with Apple. They're both $2.5 trillion companies, largest out there and the biggest impact in the indexes. And you can see we're right on a trend line. This is a daily chart too, by the way, guys. So you need to see a solid break or a solid close below here, and I think we'll get it. You can see the PPO rolling down, poised to make a bearish crossover right here. We're coming off extreme overbought conditions. You might not be able to make it out there. That's about 79 on the RSI. Usually you get to that point. Last time we got to it was right here, and you can see the stock fell. And so even when you get there, you don't always fall. This was early on in the uptrend, but you at least went sideways for a little while, did some consolidating. So anywho, and by the way, you didn't have any type of sell signals back then. You just had overbought. This time you have overbought plus, not yet, but a potential sell signal coming. And there's a big old gap right there. That would be your first target. Just want to lay that out. Not my favorite, but I'm showing you what's going to have an impact and what will help increase the odds that we're going to hit those next downside targets on the Qs. Apple, let's go back to the 60-minute chart. And let's even do that on Microsoft. Let's zoom in real quick. There's the trend line. Real clean, solid, well watched, I have to imagine. And there's your divergence on the 60-minute chart. So we had a little minor trend line there that broke and back tested. Now we're at the more significant trend line. If that breaks, here's your targets right there. Again, I should have a line at the top of that gap right there. So there's your potential targets of Microsoft. Down to this one. Not at this point in time, that's all I'm looking for. We could certainly get more, but that's 306, which is about 7, almost 8% below current levels. Apple, it's a little megaphone pattern, but we recently put in a divergent high on the 60-minute chart of Apple, just like we did back here. That was our last divergent high, and this is what happened. And that set up this nice, clean, bullish falling wedge and breakout in this rally. So it's wash, rinse, repeat. Divergent high, correction. Divergent low, rally. Divergent high, I believe, correction. Amazon, same stuff, simple stuff, divergent high, correction. Don't have a clean up trend line or anything on Amazon. Tesla, I have some thoughts on Tesla. If you guys follow the headlines, Musk tweeted out recently to all his followers, should I sell, big chunk of stock to pay taxes? Look, you guys all have your opinions about him. I know the guy's, done a good job with taking this company to where it is, but I believe he's one of the world's biggest egomaniacs. He puts these tweets out, and he's done it. He has a clear history of it, just to see if he can move the stock and/or the market, and to move Bitcoin, to move Dogecoin. That's his thing. Now, my take is, I don't know much about Musk. I don't follow him. If he's a big philanthropist, does he give his money away to charities? Because he claimed. He polled the public to see if he should sell a big chunk of stock to pay taxes, because billionaires don't pay enough tax. I personally think it's a reason. When you're a major shareholder like that, if you dump a lot of stock without a clear reason, that's a red flag, and that brings a lot of selling to the company. This is just my opinion. I think this was a smoke screen. I think he knows something. I think he probably realizes the company is extremely overvalued, and/or maybe there's something on the horizon, some geopolitical force, something coming down the pike, and use this as an excuse to sell Tesla stock under the guise that he was doing it for the greater good. Again, just my take, but take it for what it's worth. Maybe I'm completely wrong, but what I can tell you is a breakdown. What he did caused the breakdown of this steep uptrend line, followed by nothing but selling right now. And when you look at this is the weekly chart of Tesla, and there's just been some big divergences building. And, it's not as if they haven't played out. We had a big correction right there. It doesn't look like much. When you look at a stock like this on log scaling, which we're looking at on this chart, that drop back there was 40%. So that, looks, to the naked eye like a little pullback, but no, that was a 40% drop. And that was with the divergence back here. At this point in time, that divergence has only grown larger on this marginal new high right there. So bottom line, where do I think Tesla's going? I'm going to move this line down right here. This is the first support. I don't know why that line was there. About 880, and then this uptrend line. So I think we'll come in and kiss this uptrend line right there. And that's going to be a drop of about, let's see, and it will certainly impact the Nasdaq 100 and the S&P 500. That'd be about a 35% drop if we get there. And that's, again, just based on what I'm seeing on the weekly chart. Is it going to get there if the stock market only has a mild correction now and goes on to new highs? No, probably not. It'd be extremely unlikely due to the weighting in the indexes that you're going to see Tesla drop 35%. Is it possible in the charts? Absolutely. Is it likely? More than at least a decent chance, if not, better than 50-50. Yeah, based on what I'm seeing in the charts, I don't have any solid sell signals. If I had a good, any kind of bearish candlestick reversal pattern on the weekly, I'd have more confidence. I just wanted to share the outlook and share the fact that I do think that this snapback rally, just like in the Qs, is an objective short entry on Tesla, right around here, up to, but not below, not much above, 152 right there. And minimum target down here is 945.29, and or this uptrend line. I'd say we'll probably shoot through the 945.29, hit the trend line, and then consolidate on there. There's a big old gap right there, by the way. So actually, let's highlight the bottom and the top of the gap. So there it is, guys. If you are interested, here's a trade idea that I think will happen, and that is a drop of a minimum almost 12%, and I'm preferring a drop down there, and that's about a 15-16% drop, 909 or 910 we'll call it. Cover a little bit above that to be safe, and that's Tesla. Facebook, divergent low, played out for a rally, but then you put in a divergent high. Wash, rinse, repeat. Then you went on to break that nice clean trend line, and it's moving lower, and I think we'll continue lower. A few more. NVDA, divergent high. Pullback target's going to be this trend line at minimum, and there's also a gap right there as well to be backfilled right there. So there's your target on NVIDIA. And again, I'm doing this either as pure play short trade ideas, or to help align or confirm my analysis on the Nasdaq 100, right or wrong. This is how I see it. And so you're looking at about a 10-11% drop there. There's Alphabet, I should say divergent high, negative divergence, 60-minute chart. Last time we had divergent high was right here, and that was good for a drop of about 11% right there, 10-11%. ASML, this one's an objective short right now. We broke down. We had a 60-minute rising wedge with negative divergence. Break down, near back test, minimum target right here. Preferred targets are down here, 706 and then 666 almost. Last time we had a divergent high, same thing happened. You broke down. Sometimes you break down and never look back, but quite often you have an initial snapback rally to either backtest the wedge or come in, in this case, right to the breakdown point, which just extended the divergence. And had you shorted the stock on either the breakdown or the kickback rally, it was good for about a 20% drop in ASML. Adobe, objective short entry now, breakdown here, rally into resistance, big time your previous high. Last time we had a divergent high was at when we were at the same level we failed at, 674-ish, and at that point in time, Adobe fell from there about 18. It has the potential to do that and more, because this time you have a double top high, 2 rejections at that level, followed by a clean trendline breakdown, just like you had right here. And so that's it. There's your minimum target. And on this one, or any of these, it's probably not a bad time, guys, to just, if you're especially a less active swing trader, just trail down stops and allow for the potential of a runner trade. But if you want to take a quick buck, take profits there, game of bounce, nothing wrong with that, or swing it all the way down to that previous reaction low. All right, I won't go. Oh wait, one more I do want to do. Netflix, another objective short entry. Again, we're on 60-minute charts here. We're looking at clean negative divergence right there at the high, breakdown, and we didn't go very far because we had nice support below at about 644 or so. Back testing again. Again, I cannot promise this pans out, but I can promise you I believe this to be an objective short entry right here at the back test of the trend line, next target and minimum target 618 right there, and certainly the potential for more when you zoom out to a daily chart. You can see the breakdown of that same trend line there. 616-ish is first good support on the daily, and I think we'll come and test this multi-year, about a year-long plus trading range that we broke out of. So there's a story on Netflix. It broke out, it successfully back tested, we had a rally up here, and now we broke down this trend line. We also put in negative divergence on the daily time frame, and so that's where I think Netflix is going. You know what we'll do? It's 20 minutes, and we'll keep this one limited to the broad markets. I don't want to do a 30, 40-minute video, but I do have a lot of trade ideas to update for you, and some new ones as well, including some things to note on the cryptos, and again, updates on my, what's been my favorite trades for quite a while now, the precious metals, and anything else. I'll wrap those into a different video, and or include some screenshots for you on rightsideofthechart.com. All right, this has been Randy Finney. Have a great day.